This? Ooh, flashy. No,
Yeah,
that's
that's nice.
do you? All right,
Sure.
all right, okay.
Yeah.
Mister, I got other things to do.
I'm watching Demon Slayer on Netflix, so don't worry about it. I'm not even
Okay.
paying attention to you.
Why are you so dark? Can you brighten yourself up a little bit? All right, we're getting started here in about half a second. So don't even skip through this video because before you know it, the fourth turning, it's happening. Raoul Paul's The Next Big Thing review. That's what we're talking about here today on Jumpstart Live. I'm Peter Hartman. I'm here with my dutiful, handsome,
Sure.
braggadocious, obnoxious, uh,
Surviving twin? Yes, absolutely.
Tom Hartman. Very happy to be doing this again. Look, it's happening. It's happening. Bitcoin's flying through the roof. Cardano's going up. Ethereum. What are we at? What are their price rates right now? Bitcoin is at 67.6. That's 67,600 for you plebes.
In US
40
dollars?
in US dollars. 4,800 for Ethereum. We've got 80 at 2.12. Tom, is it
Those in the
hap?
game
Is it?
call it ADA. We don't call it
Yeah, those
what
are
you call
right,
it?
right, 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 right,
Yeah,
right. Nobody calls it IDA.
pretty sure they do.
So is it happening, Tom? Are we going up there? Are we flying up there? You said before we got in here, you're like, oh, you got a signal that said that we're probably at a top. Come on, Tom. We're heading to 300,000, aren't we?
Sure. I mean, a top, it could be a crash up, which is always great. So the questions now are going to be like, you're going to get questions from everyone like, is this a good time to buy? My favorite question. My favorite question.
All time highs, the number one question you get.
No one wanted to hear anything when it was crashing down low, where people go, "Is it going to zero?" When you hear "Is it going to zero?" that's the buy signal. That's the buy signal. It's sort of like how people feel after they miss a Black Friday sale. You go, "Oh, I really want to. I'll catch it next year. I'll catch the sale next year." All right, go a year without having it. Then I don't know what to tell you.
So
People don't want to buy when it goes up, and it makes sense, Peter. I joke, I kid, but the game is played against the team on the other side. Like if you're the Mighty Ducks, you're doing the plays that the other team isn't doing and expecting, right?
mhm.
So whatever feeling you feel, you go, it's crashing. I shouldn't buy anymore. That's when you should buy. And when you go, oh my god, when people are saying, should I buy now? You go, great, I should sell.
Okay, but come on now. We're living in this world where people are people and they're gonna look, we don't want people not to buy now. That's what drives the price up. So
No, 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 no. We're not in the game of hype here. We're not trying to drive the price up to anything. Right? Bitcoin and cryptocurrencies are going to change the world whether we hype it up or not. Right? In fact, hyping it up just causes more volatility. So no, thank you. I just schooled someone else on Reddit just a few minutes ago who was saying, "Oh, Ethereum's making all-time highs and Bitcoin's making all-time highs, and Cardano is just staying flat." I go, Cardano is still up 2,000% over the last year, right? Ethereum's up 900%. All right, come see me when Ethereum is up the same amount, then I'll be happy.
that's because it already did its major jump up. It's already put on its big boy pants. That's why it's not going to move up 2,000%. It's because people are already, in the money.
It could still do that. I mean, that's why we got options on on Ethereum. We're like, okay, we don't know if we want to buy Ethereum, but let's try options on that. But that's big boy stuff, so let's not or big girl stuff. I'm not trying to discriminate against anyone.
All year long, I've been hearing price predictions for Bitcoin. Price predictions. Oh, it's going to be 100,000, 150,000, 200,000, 300,000 by the end of the year. This is what I kept hearing. Here we are in November. What is it? November. What is it? What is it? November. What is it? What is it?
Eighth,
What is
eighth,
it?
eighth,
November
eighth.
8th. Wait, today been up. Is today the 8th? Oh,
Yes.
I got stuff to do. I got to put winter tires
Let's
on my
end the
car.
stream. Let's just end the stream.
This is end the stream. So is it happening? Are we now witnessing the run up? Is there enough time for those predictions to come true? Or are we ending this year at what, 68,000?
Predictions are an interesting topic, Peter. All right. One cannot predict on which day in January it will snow, but one can predict that winter is coming. And it's raining, buddy. It's raining now. So people want to have these price predictions like is it gonna be 100,000, 200,000, 300,000, as if that's gonna Peter, what if someone knew for sure that it'd be $300,000 by the end of the year, they still wouldn't buy it now. because the person who's asking that question doesn't understand what the game is, what they're doing. You buy the thing that could go to that price because you're not buying anything else that's going to that price. The extra money you're spending on your sushi order that you're treating yourself, that you're spending $60 on, you could turn that into Bitcoin money. But people go, no, I don't want to do that because if it falls, then I'll waste my money. Yeah, well, you pooped out that sushi and you don't even remember what you ate. All right, so you're doing it anyway. So you're buying potential for the future. But more than that, that's why we want to go through the Raoul Pal video today to see. So he's just been going through. He's been using Real Vision, his financial media platform, to really get a handle on what he calls the exponential age really is. Right? We seem to be in this period where there's always been the increase of the rate of change of innovation and creativity over the course of humanity, right? Humanity is always going through these periods of developing new types of technologies and then democratizing that technology throughout throughout the population, right? First, the technology is expensive; it's only available to the rich people. Then it gets the process gets refined of how to create it. More people get access to it, and it raises the lowest common denominator up. And so this ratcheting process has been increasing, but so that rate of change has been accelerating. And so that acceleration, now we're getting to this point where the amount of world changing innovations are happening multiple times within your lifetime, right? So you can imagine that when they invented the backhoe, man, that was talk around the coffee table, around the pub for 100 years afterwards. But now you have the invention of the hoe happening again and again and again and again and again, year after year after year. We can't even keep up with it. I mean, just now they invented a new virus for crying out loud. So innovation is happening everywhere.
Yeah.
So Raoul is exploring this on his platform, and what's great is that his crypto tier, the crypto tier for Real Vision, they cover all kinds of things: equities, bonds, commodities, what have you. But they a lot of that information is paid. You have to pay a few $100s to a few $1,000s a year in order to access it. But the crypto space, he finds it so important, so interesting that the information is free, just to give your email or watch the delayed videos on YouTube. So it's he's been going on this journey. He's trying to wrap his head around this, right? He's like,
okay, first, before you dive into this, I just want to let folks know, if you don't know this, Raoul Pal, who's the creator of Real Vision, in this instance, we're talking about Real Vision Crypto. He's our dear leader. Okay, he's the person, probably the person. Is it too far to say the person we trust the most when it comes to finance or this topic specifically? Or
well, Raoul Pal would hate that. He doesn't want us to trust him. He doesn't want anyone to trust him. He what he's doing is he wants to explore the subject, and he's doing so publicly. So he goes, listen if you want to listen. Don't listen if you don't. Look, he has made trade ideas inside crypto and outside of crypto that have lost people tons of money, right? But if you have a success rate of above 50% when it comes to the financial space, you're doing pretty well, since most people fail. And so he's been doing well for 30 years. It's just that he's never seen an opportunity, the sort of things that are happening right now in the crypto space and technology in general. And so he's like, okay, he's going to spend the time now to document his learning instead of doing it behind the scenes and presenting information to people afterwards. He's having these conversations with people on screen.
All right, so if you follow Raoul Pal, he never fails. It's a guaranteed win. He's definitely the person you're going to want to follow. But check out Real Vision. Today we're going to be going through a video. I feel like I'm a little hot. Today we're going to be going through a video that Raoul Pal put out there. It's called Raoul Pal's The Next Big Thing. You can think of it as part 2 to his exponential age video. Both of these, I believe, are available on Real Vision Crypto. So in case you don't know, check it out. Go watch it. Explore that world. If you're looking for information for crypto, that's a good place to be. That's what we're doing a video about it. They just released something that we feel is very exciting. It really provides you perspective. We're going to walk through it here and give our take on it. All right. So, Tom, I interrupted. You were saying something about dear leader
Raoul. I know I got around to it. So just the long and short of it is that us and no one else. Don't listen to anyone's prediction, right? The point here isn't what can we say definitely will happen in the future, or rather, we're not trying to make very precise predictions. What we're saying is that this is the climate. There are things happening. There's a what I call a convergence of phenomenon that we've never seen before in all of recorded human history. And when something like that happens, and a lot of people are noticing that, the worst thing you can do is to ignore it, right? So you want to be part of what's happening. Um, we've all been part of conversations recently where people somehow use technology in their business life or daily life in such a way that generated this massive surge of productivity. Whether that's using Zoom, whether that's people. I mean, I had a conversation with someone who's making $80,000 on OnlyFans over the last just within the last year. So someone goes, "Oh, okay, that's ridiculous, and you shouldn't do that." Well, that person doesn't have to go on Craigslist and find Johns on the street and worry about who's going to kidnap her at the back if there's some car somewhere. She doesn't have to do any of that. She doesn't have to do any activity she doesn't want to do. She gets to filter people directly. She gets paid handsomely for it. I mean, and she's using technology in order to facilitate that. And she's not even in crypto yet. Can you imagine when the crypto meets OnlyFans? It's going to be bananas. And so, using technology, using technology and understanding this process of what we've talked about in the previous videos, like in the foreturning, this feedback mechanism that's happening, this network effect, this technology software eating the world. Using that in your daily life and your professional life is, you cannot ignore it, because if you ignore it, you're going to get chewed up. And so this is what Raoul is understanding today.
Raoul talked about tokens, and one of the things he's excited about is these community tokens. And you're just saying that I never really thought about it, but that OnlyFans community, you're going to see a lot of rich people coming out of OnlyFans because of the shared equity that people are going to have, right? Can you imagine you're not only just paying somebody for getting their content, but you're also sharing in the equity when they become popular and gain more money, you become...
Yeah, but now you're stepping on the video, Peter, so I think we should get to it.
I was just trying to create a proper sort of, few minutes on OnlyFans so we can clip that out and be like OnlyFans crypto, and get that juicy. So I was looking for something.
Well, one of the projects, like I'll take a look at projects that have to do with adult entertainment in the crypto space. I mean, everyone's dying for a project like that, right? In fact, when OnlyFans started, they were banning sexual content on their platform, or whatever sexual content on the platform. There's this big question. Okay, what's going to be the crypto project that takes it up? Luckily, they backed up. They're like, whoa, let's 1 minute. Let's back up on that. Let's put the brakes. It's time for you to come back on the OnlyFans. They did, but the crypto space is definitely going to eat that. It's going to be a no brainer. As soon as we get a payment processor that works properly with community tokens, then we're talking not just OnlyFans, but YouTube and Twitch and fan fiction and Patreon. The whole thing is getting eaten up. It'll be ridiculous to pay a subscription fee for a service or buy merch for a service. It'll be a no-brainer to purchase the tokens, because both the person, the content creator, and yourself increase in wealth. Peter, it is so exciting. I can't wait.
I was watching this YouTuber, Taylosive. His channel is Taylosive EV, and he talks about electric vehicles, Teslas especially. And someone asked him, like, do you have a Tesla? When you buying a Tesla? And they have this Tesla fund that they're working to get. He wants to get the Model Y, if I'm not mistaken. And so he put out this heartfelt video where he explained his ambitions, and then he opened up his Patreon in order for people to subscribe. And down in the comments, I'm thinking, I was like, check out Rally Tokens, because I didn't invest in your channel. I'm less likely to pay a subscription for it. I even hesitate to offer our subscription for our platform, patreon.com/happyfairchange. But if he had a token, he has a large community. If he has a token, I'll buy that token any day of the week, because I want to be a part of his journey. Yes, this helps you in order to fund your projects and to get your Tesla, but also get some equity in what you're offering. And I really wish or hope that he sees my comment and does something for that. I cannot wait to be able to get the tokens of all the YouTubers that I follow and all of the OnlyFans accounts that I subscribe to. Oh my God, it's going to be so fantastic. All right, let's get started in this video. You have it queued up here?
I do. So we're going to step through it, and we'll just pause it whenever it makes sense here. Just let me know that you can hear it.
Incredibly exciting journey that we're all going on together. We don't know where it's leading to, but we know it's going to be absolutely massive. Join me, Raoul, as I guide you on our adventure to discover just what this new world will look like.
How exciting.
Oh my goodness.
Hello, I'm not Raoul. I'm Ash Bennington, here to kick off and host this conversation with Raoul. Raoul, it's always a pleasure to be with you, but especially a pleasure to be with you today as we discuss you going down the rabbit hole on your journey in Raoul's adventures in crypto. Welcome.
It's great, Ash. We never get a chance to have a long-form conversation. So we're always kind of snatching half an hour on a daily briefing. So it's just good for you and I to properly catch up with what the hell is going on.
Yeah, absolutely. There's been so much material that you've covered on the show since September 10th. So if you've missed any episodes or if you're totally new, we're going to set the counter back to zero, start from the beginning, and tell the whole story.
See, this whole show, Raoul's Adventures in Crypto, is basically my learning journey. I am learning along with everybody else, and I'm taking everybody with me. There are no answers here. This is not like the macro world where you kind of know how things work and it's deciding which way it's going to go. Is it this path or that path? This is like, it's an unknown future, and we all have to figure it out while sprinting a marathon. So it's immensely hard work. There's incredible amounts of input of new information coming that it's overwhelming us all. So what I'm trying to do is build this framework in my head that allows me to take into account all the things that are happening without having to be an expert on all of them.
So just as a side note over there, so this guy's been inside of the financial business, the financial world for 30 years, right? He has a beautiful home in the Cayman Islands, and he's made tons of money, and he's very successful. And even he finds it very difficult to wrap his head around what's going on in the crypto space. So he's just like, all right, if I do this for Real Vision publicly in front of other people, then he'll really pay attention. Because for a while he wasn't paying attention. Well, he was paying attention tangentially, but there was like almost no crypto content on Real Vision at all. And now the platform is almost completely crypto oriented.
And I want to be an expert in some of them. So that's how I'm approaching it. It's impossible to be an expert on everything, and anybody who tries will just die of overwork. So the best thing is that. So what am I looking at? Let's start first with, okay, I've explained to everybody now that this is the fastest adoption of any technology in all recorded history. So the chart you can see on the screen now shows that the internet back in 1997, when it had 150 million users, was growing at 63% a year.
So I was just going to pause here for people who are not used to seeing charts. So this is a chart here. I'll leave the chart up. This is a chart that is showing the white line is the adoption of the internet. So basically the total number of internet users from 1992 to 2006. That's the white line. So you can see that it curves up and then slopes down. But this is a logarithmic chart. So if you look on the far right, the white numbers over here, this is showing that it's going up by here. The first interval here is 10. Then
if you move your mouse, just so you know.
Sorry. So it on the right scale, it goes up. It's going up from 1 to 10, then 10 to 100, 100 to 1,000, 1,000 to 10,000. So that's called a logarithmic scale. So if this was done in a linear scale where each one of those intervals were equal, the line would be a parabolic curve straight up. All right.
Say that again.
If the scale on the right, instead of going up in this logarithmic, it's always going up by times 10. If it only went up by 10, let's say 10, 20, 30, 40, this white line, instead of softly curving the way it is right now, it would be like a hockey stick. It would go a little bit up and then shoot up a straight line up.
Gotcha.
Because it's just millions and millions of people who are adopting the internet on that white line. Now the orange line is the total number of crypto users. So there's not just Bitcoin, but the entire crypto space. And the line starts off, first it's a solid line at the beginning, and then it goes off into a dash line, which is the projected growth, the projected number of users if it were to follow a similar path as the internet, which is what we've seen since 2016 all the way to now, 2021. So what he's saying is that the rate of adoption of the crypto space is even more and faster than the internet was in a comparable time in 1992 to 2006.
Wow.
So
Wow.
does and at that time, that was the fastest adoption of technology ever on the face of the earth. You can imagine in a globalized system, in a global interconnected system, it could be the internet was exposed to billions of people, and so millions of people came online. And crypto is far outpacing that on a logarithmic chart. So that space you see there between where it says we are here and the white line underneath,
Mhm.
that space is like millions and millions of people. It's massively growing.
Wow.
So this is never before seen. So by end of 2023, there's on this chart it's anticipating about 1 billion crypto users. That would be 1/7 of the planet would be using crypto, which is the internet only reached that number in actually it hasn't even reached that number yet. Oh, sorry, no, it has in 2006. All right, so let's continue.
150 million users in crypto is present day, and it's growing at 113% a year. So this is why it's so hard for us all to catch up, because it's growing at a ridiculous pace.
If something grows at 113% per year,
Mhm.
then it is more than doubling every year. The number of users are more than doubling every year.
And this is happening because I mean, I don't know this for sure, but my expectation is that it was more localized to the United States, maybe the Western world, whereas crypto, you're seeing it explode across the globe. I mean, Africa is loving crypto. India is getting into crypto. I mean, China just banned it, but in a lot of places that you wouldn't even see much, like laptops or internet or whatever, people are using crypto.
Actually, it's a different way than that. So if you imagine that the internet could only spread where there were infrastructure for it. Like there's plenty of places even now that they don't have wired internet. They don't have the cables for it. They skip, let's say, straight to mobile phones because it was easier for them to use data for their phones than to have the cables. So there was a infrastructure issue, but then there's also a thing of what's called network effects. Just to reiterate, network effects is this idea that the value of a network increases with the number of new users that network gains. So Facebook, if there's only one person using it, is not worth anything. If there's 1,000 people using it, it's worth a little bit more. And if there's 1 million people using it, it's worth that much more still. So every new user gets on Facebook makes Facebook that much more powerful, following what's called Metcalfe's law. It's this a way of measuring network effects. And so crypto is a network built on top of an existing network. So in that way, crypto has this jump start. It came out of the gate running because it didn't have to. The road was already built using the internet. So now, with the adoption of mobile phones and the ubiquity of mobile phones and data from satellite, you don't need the wired wired lines and towers to transmit internet in the same way. Now, everybody who has a mobile phone can participate in crypto. And because the participation in crypto is so easy, in the same way that registering for an account on Facebook is easy, buying $1 worth of Bitcoin is easy, then the adoption rate just grows exponentially. There's nothing to hinder it.
I heard Kathy
Wood.
Wood, I think Kathy Wood say on from Ark Investment, she said that crypto was the thing that was needed when the internet was created, but we didn't have it. So it's like crypto is like catching up to the internet. Instead of developing at the same time with the internet, the roads have been paved, and now crypto is just flying down those roads that are really paved. You have the internet on your phone, on laptops, on tablets, and now you're having crypto being able to just say, hey, everything's all laid out for me. Let's just go.
Even more than that, where there's a limit to where crypto can go, crypto can cause the internet to come into a place that doesn't have it. Because crypto is based on blockchain, right? This idea that we have this, just to reiterate, crypto means verified, and so basically the blockchain allows for micro businesses. In the same way we're talking about social tokens allow a content creator to provide value, direct value, without having to go through a sponsor and get ads and all that and sell merchandise. They can provide value directly through the content that they're creating or the service that they're offering, and the people who buy their token are exchanging that, right? That token becomes valuable because it's being exchanged within that content creators community, and because it can have an exchange rate with fiat currency or with some other crypto thing. Now that value can be exported and converted into groceries, into whatever. Crypto, the technology can make it so that someone who has a phone in their 2,000 person town in Africa, they can turn the data on their phone, they could sell that extra data that they're not using to the people around them. Now they're a Wi-Fi hub, and people can pay them for use of their internet. They don't have to use some third party. They can pay, Jimmy across the street, Jimmy Matumba across the street. And so now Jimmy, who's making this extra money with the cell phone, he can pay for more data. And then more and more people can participate. And then as more people participate, someone down the line who's now made money because they invested in by buying the token or participating in the network with Jimmy, now they can start up their mobile device, they can turn that into a hub of internet too. And both hubs of internet make the internet in their area faster because they're now networked, while each one are still behaving individually, using a cryptocurrency as the medium, right? So then you have this incentive system where people go, well, I'm going to be an internet hub, and I'm going to be an internet hub, I'm going to be an internet hub. And then you have now, through this network effect, through cryptocurrency, you've internetified an area. This is something the internet couldn't do.
All right. Let's go.
Accelerating. I mean, we've seen in the last year alone the rise of DeFi, NFTs, DAOs, central bank digital currencies, stable coins, in a way that none of us could have expected. It's just happened so fast at such scale. And that's only going to continue. And that's a core philosophy of the exponential age. How I look at this, to frame it simply, is this is currently a $2.5 trillion asset class. It is, if you
$2.5 trillion asset class means that he's saying that if you take the price of each crypto and multiply it by all the tokens that are out there, so what's the value of all of Bitcoin, what's the value of all of Ethereum, Cardano, and so on, if you take the entire crypto space and you figure out what's the current value that's circulating, it's about $2 trillion of value. And he's about to compare that to other systems, other financial systems, other assets, and their value. So he's saying if crypto's 2 trillion,
if you compare the other asset classes, they're between 150 and 300 trillion until you get to derivatives, which are 1 quadrillion. And
derivatives are things like options or different types of there's different types of financial instruments that are not directly an asset, but a derivative of that asset. So for example, if I have a house, that house is an asset, but the mortgage on that house is a derivative.
And then when you get to FX, it's multiple quadrillions. So the reality is, if we continue this rate of adoption, we should get to an equivalent size asset class in these digital assets. And that would make them worth 200 trillion. We have never, in all of human history, been given an opportunity that an entire asset class, not a stock, not a single token, an entire asset class goes up 100x in value, probably by the end of this decade. So as I've talked about before, this is, I think, the largest distribution of wealth and fastest distribution of wealth in all recorded history. Because unlike most other wealth distributions, things like railroads, phones, even computers, and even the internet, they accrue to giant companies. This is accruing to tokens which anybody can participate in.
So he's saying that those other systems, railroads, phones, computers. It's those who have money who are able to build them, and so the profits go to the richest. You have to be rich in order to be able to fund those projects. Whereas in crypto, a kid can do it in his basement. So he's saying not only is it the fastest adoption of any technology, not only is it a $2 trillion market asset class valuation that could be worth 200 trillion within 10 years. He's saying, and anybody can participate.
Go out there and get some kids in basements.
Own a fraction of the token. So Bitcoin as of today is 60 something thousand. By the time this interview comes out, my guess is going to be a bit higher. But you can own a small fraction. You can have $10 in it. So everybody can participate in this, right? This is incredible. And this is why I'm so passionate about this space is I was driven on a mission after 2008 and 2012, the European crisis, to tell people about the risks and opportunities. I didn't want somebody to come to me and said, why didn't I know? My job, the whole job of Real Vision is to make sure everybody knows. So I've been banging the table as loudly as possible saying, look, there are no certainties in this world, but this is the highest probability opportunity I've ever seen and the biggest magnitude of any opportunity I've ever seen in my entire career or I've ever heard about. So that's the scale, and that's why I am crazy interested in this. I have been following Metcalfe's law as my guide for this. Metcalfe's law is about how do you value a network? And it's about basically the number of people on the network plus the number of connections between those people. And the more connections and the more applications built on top of those people, the more valuable it is. So the biggest network is currently Bitcoin. And Bitcoin has less applications built on it than Ethereum does, but it has more users. So it's immensely valuable. It has the store of value proposition that most people are familiar with. What is interesting is adoption effects seem to repeat themselves. It seems to be a human behavioral thing. So if you look at this next chart, Bitcoin now is basically exactly following Bitcoin 2013 in price.
So this is a chart showing the price of Bitcoin. The line in white is the current price in Bitcoin, and the line in blue is the price of Bitcoin from 2012 to 2013. So what Raoul is pointing out right now is that clearly there's a correlation between it. That somehow, because Bitcoin is a network, but also a currency, what's happening is that the price of the currency is giving you information about the state of the network. So on Facebook, you can tell if a profile is worth more or less than someone else's. You can use sort of the number of friends that person has as a proxy, right? Mm-hmm. Someone has 50 friends, their account is worth less than someone has 1,000 friends. But it's not exactly right? Because you can fake the amount of friends that you have, or you might not be very active, or when did you get those friends and how long did you do it and what type of content are you sharing? It's far more subjective. But when you come to price of a network, then this price is the balance of the supply and demand of that network. There's a number of users and what they are willing to transact at. And that's telling you what the actual price is. And what Raoul is pointing out here is that it seems completely incredible that the price movement, the adoption rate, and the pattern of adoption from 2012 to 2013 is matching exactly with 2020 and 2021, which means that the price is not moving based on only just wild speculation or by accident. Somehow, just like in the fourth turning, there's a feedback mechanism where the value of the network is becoming valuable to new people, and those people are being adopted into it, and their adoption into it is then moving the price in a very predictable way. So he's been talking about for the last year. He goes, I think Bitcoin is going up to, if you take a look at the price, the chart on the left, the white numbers, he says, I think it's going up to $250,000. because that's what it did. It went to when it went in 2013 to $1,000, it had moved up from $10 to $1,000.
Mhm.
So he's saying if the same process is occurring, it'll move up by the same magnitude. In which case, by the end of the year, it should be 250,000. Now, when he was saying this, and Bitcoin had dropped 50, 60% a few months ago, people are saying, "Well, you're crazy. Bitcoin's going down to zero." But here we are today. Bitcoin is at all-time highs and climbing faster and faster. And Raoul is sitting there going, "What the hell? This is following exactly." So let's listen some more.
Price structure. It's weird. And this is not a chart I've just pulled up today. I've been following this for a year and a half once I first started discovering Metcalfe's law. And I'm like, bloody hell, this is weird. But it gives you a rough idea. I don't expect it to be perfect, but it gives you a rough idea. And what I'm expecting is a gigantic rally into year end. And we'll talk a bit about an extended cycle in a sec.
It's a spooky chart. It's a fractal chart. It shows the self-similarity of growth within Bitcoin at different points in the adoption cycle.
So just going to repeat here, we talked about fractals. Fractals are very important. Fractals is basically the nature of our reality, which is to say that we're in this feedback system. A fractal is an equation that when you solve that equation, the answer for that equation goes back into the equation and iterates it again. So the equation never ends. It just keeps on spitting out a new answer that incorporates the previous answer.
Mhm.
And you get this sort of feedback mechanism. And you get these patterns that are infinitely complex, but very similar. They look very much like they did before. So certain things that happened before happen again. So a tree is fractal. You expect that every leaf on a tree are different and unique, but that they all follow the pattern of a leaf. So if you see something budding on a tree, you go, well, the leaf is probably going to look very much like this, grow at this speed, age at this rate, and fall off around this time.
Well, besides companies or stocks or whatever that are related to crypto, does this fractal iteration type of example appear in the regular stock market for anything else?
It appears in technology stocks. It appears wherever there are network effects, because network effects is just another way of saying this feedback loop, right? When we were talking about the fourth turning, and we're saying we were talking about the idea that a generation that comes of age during a crisis and has to solve that crisis, they have certain types of characteristics. And then the way they treat their children will be very predictable. It'll be very much like any other young adults who come of age during a crisis have to solve it and deal with their children. And then those children have very predictable behaviors, and their children have very predictable behaviors, all the way to the point where you get to the point where the generations move on, the people who remember the crisis have died off, and that just so happens to coincide exactly with the seeds of the new crisis that'll start. This happens again and again, the cyclical process. And what I've mentioned in previous videos and what we've talked about is that if any part of a system is fractal, then the entire system is fractal. And so we notice these types of self-similarities, which is another term associated with fractals. What we're seeing is that in technology stocks, think of Tesla, think of Microsoft, think of Facebook, it also follows this weird Metcalfe's law that the value of the stock increases proportional to the number of users and connections on their network.
Gotcha.
Yeah, and if you remember, 2013 was a hell of an adoption cycle. It was the initial one, and it had some violent moves. It's kind of suggesting violent moves. You know, just by using that chart, it gets me somewhere like 300,000 Bitcoin price range. Okay, that's above most people's expectations, but I don't see any reason why the chart's not going to work. And we'll come a bit more about how this cycle plays out in a sec.
300,000
But the other
when?
killer chart,
By the end of the year. Within
Raoul
next
Powell's
2 months.
prediction is 300,000 by the end of this year.
Yes. Well, not prediction. He's saying, look, if it follows what it did before, it's 300,000 by the end of the
Okay,
year.
hang on. Raoul Powell saying guaranteed by the end of this year, 300,000 this year.
That's right.
But we're
Next 2
November. We're November. We're November. What? We're November.
November 8th.
We're November 8th.
Do you remember what happened last year?
COVID.
No, last year Bitcoin also skyrocketed
Oh yeah, no, yeah.
in the last 2 months, all the way into the end of the year.
But
It was
300,000, it
bananas.
seems bananas. It seems insane. It seems like,
That's
how
what
is
he's
that even
saying.
possible? Does
That's
that
what he's
mean
saying.
we're going to be watching this like go up 67, 68, 69 like we did last year?
Yes.
Last year we watched this thing go from 30 something up
No,
1,000.
less. We watched it from 12,000 all the way up to
Oh,
40,000.
that's right. Oh, that's
Yeah.
right. When we did our videos at 9,000, but at some point it was just like 34, 35, 36, like day after day. So right
Hour
now I'm
after
seeing.
hour.
So I'm seeing 67.5, which is kind of unbelievable because this morning was 66. Yesterday it was 65.
5 days ago when he did this video, it was 60,000.
So when we started this, before you were like, oh, I just got a signal, we're at a top for Bitcoin. What was your point there?
Short-term moves. Oh no, the top for at the beginning of this video, I was being facetious.
Oh, so we could actually be in the game that we saw that it just keeps going up and up and up.
Yes.
My mind's blown, Tom. I'm blown. All right, let's go. Let's go. Raoul, let's hear you.
Or I start realizing that Ethereum's exactly following Bitcoin's last cycle. And it's like, oh my God, this is spooky. I mean,
So this is a chart of Bitcoin in white from 2011 to 2019, and overlaid over that is Ethereum from 2009 to 2016, and it also is following very similar pattern. It's the same fractal set. I mean, it's skyrocketing, and so this chart.
So I don't see the pattern. Is it because it's in the lower part of that line there? I mean,
Yes, this lower part on the line, because we're seeing it in a linear way. See, we're seeing this linear. I was telling you, when you see a linear chart, you're going to see it explode. But
Oh, I
basically,
see.
this is suggesting that the blue line will end up near 20,000 for Ethereum by within the next 3 months.
Oh my God.
But then perhaps crash massively from 20,000 down to 6,000, or down to 3,000.
But then go back up. That's why you sell a little bit as you go, a little bit as you go. That way you ain't crying like a little baby when this thing drops. Am I
Well,
right?
this is the interesting thing. We don't know, like, the feedback mechanism. What happens if the more that people know that this pattern is happening, the less likely that it should happen this way. Either by the price doesn't go up that high or goes up massively higher.
Okay.
Right?
You said whatever it is that people are thinking is going to happen, then it's not going to happen. So are we making it less likely for this to occur the more we talk about it?
We don't know. We don't know how many people are actually listening or what their behavior will be.
I hope nobody's watching this, okay? How many viewers do we have right now? 0? Let's keep it
down
that
the
way.
stream.
Shut
the
it
stream
down. All right? What are we doing on YouTube, okay? If this is what's going to be happening, forget YouTube and let's keep on with just crypto.
No, but it could be that this type of thing is exactly what causes the adoption rate to go up.
I see. It's like I go back in time, and then I Marty McFly, my mother, and then my own grandfather.
Now you're thinking
I'm
fourth-dimensional,
feeding. All right, let's go.
I mean, I've got action on my Bloomberg in real time, and it almost works. Tick for tick. I've never seen anything like it. And that gives a cycle projection for Ethereum of 20,000. And again, I actually think it's going to overshoot. But I thought, well, if my logic about Metcalfe's law is right, then these layer ones that we'll talk about later should also fit.
Layer ones are other solutions, other types of cryptocurrencies. He goes, well, if it's true for Ethereum, what does that mean for Solana? What does that mean for Cardano? Are they also going through the similar thing, this adoption cycle?
Charlie, here's the chart of Solana against Ethereum in the last cycle. When Ethereum was the darling, the new breakthrough, it's exactly following. And the same is true of Terra. It's exactly following.
Oh my God.
It's like, wow. So as these different protocols get adoption, they're all behaving in the same way. While Bitcoin is repeating its early cycle of massive adoption. So for me, this is super interesting. And again, I don't expect these to be perfect, but they're contextualizing network adoption, which is, I think, everything in this space for the time being, until we start moving into some of the other things. So how do I think this plays out? Because that's what everybody cares about.
Mm-hmm.
I honestly think we're going to have a ridiculous year end. But here's the rub, is we've got different people, actors in the business now. So if you are BlackRock or you are Tudor and you have Bitcoin at end of year, if you are BlackRock, and let's say I'm right and Bitcoin goes up 4x into the end of year or 3x, you are going to rebalance and sell some Bitcoin.
All right, just to clarify what's being said here. So BlackRock and Tudor are two investment firms. BlackRock, you'll know them infamously as buying up all the real estate from people who can't pay their mortgage anymore, and then renting out the houses to people at a higher amount. That's just some of what they do. And I love the name BlackRock. It's like, did they choose a name to be evil? I don't.
I know, it's like out of a Buffy spinoff called Angel or something.
That's right. Right.
Wolfram and Hart, you know.
Paul Tudor Jones is a very famous investor, and so he's saying that so if we're talking about feedback loops, then the participants of the network matter because their behavior will change accordingly. So he's saying this is the first time in the Bitcoin cycle. So he's talking about all these things that are following Bitcoin. Ethereum's following Bitcoin, and a bunch of things are following Ethereum. But he goes, well, now Bitcoin's following itself from previous periods. But he goes, but now we're reaching a point where institutional investors are there. These are people with billions of dollars in it. Now it's not just a bunch of African farmers buying Bitcoin for $10. A bunch of people playing video games at World of Warcraft and buying Bitcoin for a few dollars. This is now large monies coming in, and they have rules to follow. And so if Bitcoin goes up to 300,000, then, or whatever, 100,000, they might have to sell because their rules for their portfolio will say, well, if this asset is overperforming this other one, then sell some of that one at the end of the year to reinvest in something else, or sell in order to pay for taxes, or sell to have cash on hand, or they are also seeing the same charts and it says it might fall, so don't be the guy who's closing the door, turning the lights out, sell beforehand. So he's saying these dynamics might change the dynamics of what happens with Bitcoin in this cycle. And the same that we talked about the fourth turning, that we might be, if we're in a global fourth turning, that might be different than just an individual state going through a fourth turning. Something new.
But you said that if any aspect of the system is fractal, then the whole thing is fractal. So wouldn't the self-similarity be echoed regardless if it's a larger scale or a small scale?
Not necessarily. So you're seeing there's more to the fractal nature of the price movement than just the price, right? The volatility is also fractal. And so that might mean that what we could see is that even though the price might head up towards $1 million per Bitcoin, that it might be so volatile that it drops 80% 3 times in a year, right?
By the dip.
But that each part of those dips to new highs might itself be a fractal of the whole system. Or it might be that sometimes fractal system, as it iterates through, just like how we went from linear to the linear moved into the exponential age, the linear age moved into the exponential age. The exponential age might give away to something we don't know. So we don't know what might happen. Now that there's different behaviors to account for inside of the network. So he goes, we don't know. It could make Bitcoin crash, and it could skyrocket it beyond all belief.
But he says that, they might rebalance at the end of the year, but come January, beginning of the quarter, well, let's listen to what he says in.
If you are Tudor, you come into the end of the year You want to lock in your gains because you get paid your annual performance fee in January, so you will probably flatten out your P&L. So what happens is we might see
your P&L is your profit and loss. So basically, his the profit or loss of an account.
Selling towards the end of December, which the market is going to go, the cycle's finished. Because everybody's kind of expecting a December end, because it was 2013 and 2017 where the Bitcoin cycle ended in December. However, I think the structure has changed. I think there's a couple of things going on that will elongate the cycle. One is everybody is onboarding. The more the price goes up, the more the institutions onboard. Institutions are weird beasts. They tend to operate quarterly. So you come into January, everybody who's got approval is going to start onboarding and allocating January, February, March. So that sell-off from the rebalancing will be bought by the new institutions entering the space as they increase their allocations. Additionally, hedge funds have a brand new P&L January 1st. And what they like to do is put on risk. And this will be the bet that they'll put on. So my guess is we see more of that, and that drives prices further than we expect. I'm kind of thinking there is a probability, a reasonable probability, call it a 30, 40% chance that Ethereum gets to 40,000 and Bitcoin, whether it gets to 300 or 400, I don't know. And there's even an up chance of more.
Oh my God.
I think we've got a spot ETF that comes in the middle of that, and probably an Ethereum ETF that comes. Then we've got the other big game in town, which is the fact that Ethereum has no supply. There's about 10 or 11% of all available Ethereum on exchanges. Everything else is locked away in smart contracts, cold storage, DeFi, NFTs, and then staking. Because everybody wants the ETH 2.0 to come, so everybody's staking their ETH for the yield. And that takes it off and locks it away until after that. And then that ETH comes onto the market gradually.
So just to clarify what he's saying there, that's a lot of crypto words.
Let's not
explain every part of it.
All right.
Basically, what he's saying is that there's a supply and demand dynamic that's happening with these cryptocurrencies, right? If for Bitcoin, he's saying that at the beginning of the year, when hedge funds and money managers have to allocate something for money from the portfolio, they might say, well, let's put 1% into Bitcoin because we missed the boat last year and it went up 1,000%. So if you have billions of dollars suddenly pouring into Bitcoin after a dip in December, well, it might elongate the cycle because there's only so much Bitcoin available, and it might skyrocket the price. They're gonna have to pay whatever price people are willing to sell it at. And so,
how does 1% give us billions?
Because if your average person who wants to buy Bitcoin is probably going to buy $1,000 worth of Bitcoin, but a hedge fund might have to allocate 1% of $100 billion. So they have to buy $1 billion of Bitcoin. Well, if you try to go buy $1 billion of Bitcoin, you're going to move that price up because you're buying. When you go to buy, it's not like, oh, you could just buy it at whatever price you want, because you have to buy it at whatever price people are willing to sell it at. And if you can only buy, let's say, $500,000 worth of $500 million worth of Bitcoin at whatever the price is right now, and the next guy up is selling his Bitcoin 10% higher, 20% higher, well, then you got to buy it at that price. And then as the money chases the sellers, the price goes up and up and up and up and up and up. So what he's saying is that in Ethereum, there's a crazy dynamic where, because of all kinds of ways of how Ethereum is made, Ethereum, think of it as like gasoline for your car. In order to do anything in the Ethereum network, you need to buy Ethereum, put it in your car. Even if you don't like Ethereum, you need it, right? So you can be like, oh, gas prices are really high, but the only way you can drive your car is with the gas. Yeah. And so what he's saying is that the gas, there's like no gas. There's no Ethereum left openly on the market that's just floating around. You have to solicit Ethereum from people who have it. And for all kinds of different reasons, people are not selling their Ethereum, which is one of the reasons Ethereum is going up. Just higher, just keeps on going higher because people can't find Ethereum. to put in their cars.
That sounds like a recipe for Ethereum. I mean, skyrocket might not be the right word here. I mean,
It could go to the moon.
if he said 10% of Ethereum is liquid,
That's right.
that's nothing.
That's nothing. Right.
If people start flooding in and, I need to buy Ethereum, the Ethereum hits, 8,000, right? Let's say it doubles from here. Let's say it hits 10,000, and suddenly people are scrambling to get Ethereum. But how do you resist selling your Ethereum? What is it that you're hoping is happening with Ethereum with the staking and all this 2.0 bullshit?
Because when you stake, it's like locking away your Ethereum in a savings account, and you get paid in more Ethereum. So one of the only ways of getting new Ethereum is through staking. Like that's where the gas is coming from. And so people need to come to the stakers to get their Ethereum. So why would you sell your Ethereum? You'd be like, I have an oil mine. I have an oil well here. So yeah, you can come take my a little bit off the top of my oil well. I'll sell you some at a premium, some of my oil at a premium. But the more I keep my Ethereum, the more Ethereum I get.
But doesn't that mean that the price will have to go really high in order
Really
for
high.
people to be willing to even sell that cream?
That's right.
What's our allocation for Ethereum? I mean, holy crap! I was expecting a drop in Ethereum once it hit its phase 2 or phase 3, and is that going to happen?
Well, the previous expectations for when the new version of Ethereum was going to come out was now, but it's not. Now the next projection is in March, so we'll see. But there's all kinds of problems with Ethereum that we can't get into right now. The cure for high prices is high prices. There's a reason why Bitcoin dropped from $20,000 down to $3,000. There's the reason why it corrects. There's a reason why these things correct 80%. The cure for high prices is high prices. Eventually, you can't be like, well, the price of gas could just keep going up forever, because then people will be like, well, then I can't drive.
I'm going to buy a bike. Suddenly, gas prices go down.
Exactly. And then people will jump off on these other systems, which, like we're seeing with Cardano and Solana and Luna, people are going to other platforms and going, well, I'll use those platforms to do what I need to do instead. And so I think that's what causes it to crash after. Look, some people see that and go, Ethereum could hit 20,000, and they go, that's a great thing. I say, well, then Ethereum could also hit 3,000 after that. Like, I don't want to. You want to be sitting there timing the top? You want to sit in there every day? Today's the day it might crash? I don't like that.
Well, I'm more interested in just the energy and the interest in the conversation. It goes up, it goes down. Yeah, it affects people who are trying to make a buck in the short term. But long-term thinkers, people who are creating things, it creates an expectation for the space, a maturity for the space that is much needed. Like, I don't care that Bitcoin goes to 20, then down to 4, then up to 30, and then down to 60. I don't care about that. I'm a long-term thinker when it comes to these things. I just don't want the story of crypto or Bitcoin to go the way of the dodo. And the more it generates interest, like if Bitcoin goes to 300,000, nobody can make the case that this thing is going to go away. This is well beyond a .com bubble.
Well, that's what I find exciting. What I like, the reason why we follow Bitcoin and Ethereum, even though we don't have a bunch of Bitcoin and Ethereum, is that they're paving the way for the space. So just like he showed that if you go, okay, this pattern is happening, and if we can recognize this pattern, let's participate. Well, then why participate in the thing that's running? If we're seeing the same pattern happening in 3 other tokens that are just starting off, why not go there? And you get a thing at $2 that could later on be $4,000. Why do you want to buy the thing at $4,000 that should get to $6,000? Right? When you have a full expectations that'll follow after that. So I like that this is happening because it brings money to the space and it causes projects to be developed. But how do I tell someone who's watching this right now, who's not interested in trading it, doesn't want to pay attention to day to day, buy Ethereum today? How can I say that when I have also a full expectation that it'll be back at this price down the other side of the hill in a year? I prefer to tell them go into a thing that's just starting off, that's following the same sort of system. No,
depending on what they're looking for. If it's long term, I'd say
the
Bitcoin.
average person that we're talking to, the average person, they're not gonna like seeing their account value go up 5x and then drop Like,
Look, the people we're talking to, we lay into them. Only put in what you're willing to lose, what doesn't keep you up at night. And I think a lot of the people that I'm connected to are just going to buy and hold. It's their retirement.
buying and holding an asset that's already going through its ramp up is not necessarily the best bet.
Yeah, but if you don't
Buying
have a mind to pay attention to everything and whatever, buy and hold is the only.
that to me is the case to buying, let's say, Cardano. If you're buying Cardano at $2 and you go, Cardano's following the same sort of network process that we're seeing with Ethereum, then there's very high likelihood that we see a $2 Cardano go up to $50 Cardano. Very real possibility. And that price movement is the same price movement you're going to get in Ethereum. But Cardano's not likely to fall from when Cardano falls from $50 to $30, it's not going to give you a heart attack in the same way as if Ethereum falls from $60,000 down to $3.
Yeah, but part of what we do when we're talking to people is to manage their emotional state. If you're on this roller coaster and it's giving you ulcers, well, then you haven't listened to what we're saying. So I don't know that the people we're talking to are going to be like that, hopefully.
The game is buy low, sell high, not buy high, sell higher. Be
No, I
happy
get
that
that.
Bitcoin and Ethereum are ripping, because it means that the space is healthy and it's things to take a look at. But just because some tech company launches out and goes up 100x doesn't mean that that's the only thing you should pay attention to. You want to pay attention to the space, to the technology. That's what we're excited about.
I want to hear you say this nonsense when Cardano is sitting there at 4,800 and you're like, why buy Cardano now? And you're going to forget all of the fundamentals and the brilliant genius of Charles and the solutions that they're creating. And you'll be like, this new thing is way better because of blah, blah, blah.
Look, I can't be held responsible for what multimillionaire Tom is going to say. He has his own opinions, and let him do what he needs to do. He'll be a wiser, richer person.
They say money changes you. I can't wait to be changed. All right.
Well, it's already changed me, because now I wear suspenders.
You got suspenders hiding under there?
It's all I wear. I don't belts. Out of here.
All right.
Sorry.
Well, let's go. How much more do we have left? I don't see how we're going to be able to.
We're just going to finish this last chapter. It's like 2 minutes, and then that's it for now.
Because there's how long is this video to begin with?
The video is half an hour long.
All right.
Oh no, sorry. The video's an hour long.
Yeah, that's right.
It'll take us a month.
So I think the cycle probably goes on till the summer. I think almost certainly till March, but possibly to the summer, which will give us higher prices and a different cycle structure than we've seen before. I could be wrong. I'm not betting the entire ranch on it, but that's how I think it plays out. And if I'm right about the network adoption, then these other layer ones like Solana, Terra, Avalanche, Cardano, and some of the others are going to be super explosive. But in a risk-reward basis, they're riskier. They're not as deep a network as Ethereum is. Ethereum, to me, remains the best bet in the world from a risk-adjusted standpoint. It may not do the most in price of all, but for a major asset, my guess is it gets pretty close to Bitcoin's market cap. So I think it probably, in the end, somewhere doubles in relative valuation versus Bitcoin. I don't think the market quite expects that, but maybe that kind of short period of the flippening would be the end of the cycle.
So he's thinking that Ethereum outpaces Bitcoin and becomes worth twice as much as Bitcoin.
Sacrilege! I thought I liked Raoul Pal. I am done with Raoul Pal. Diamond hands, buddy. Diamond hands. No, this is all very exciting.
How do you not pay attention to the space? How do people go, what else are you doing with your time where you're not
What the hell?
Put some time into this? How do you not do that?
Oh my god. Oh my god.
It's like if someone goes out, hey, they landed someone on the moon, and you go, did they? Huh. Okay.
I saw my landlord today, and I was like, you know what? I should ask her if she has any crypto, And she's like, oh, no, we don't, but we're now starting to get interested in the space. And I totally get it. Like, if you're busy with other things, but it's like there's a nuclear bomb that went off, And some people know and other people don't know.
Right.
It's like, did you hear about the nuclear bomb? Oh, I heard something about it. The world is changing underneath our feet, right? There's quicksand everywhere. I'm just so excited. And, I do know and I do see it. That conversation I had with the landlord today kind of reminded me. It actually inspired me. I said, hey, Tom, let's do this video because just like Raoul, people need to know about this. Look, I don't care if you get into it or not. But if the reason you didn't get into it is because you don't know about it, oh my God. I started realizing I got to tell everybody that I know, everybody that I'm friends with, everybody that I like for sure. I got to let them know about this opportunity because this is not like, oh, you can get in a cool stock tip that you can get some money with. This is the world is changing. The price appreciation, and that is a small aspect of it, but the world is changing all around us. And there's so many people, even I've been stuck in moments of crisis and despair considering what's going on with the world. I read a lot about people who are against capitalism, against the government, against what's happening in the world today. People crying out for solutions, most of whom don't really seem to be aware of the sheer magnitude of change and possibilities that's coming in the crypto space. We got to find some way of communicating this to people more directly. In fact, we were talking about some ideas for Happy for a Change where we can do some rebuttal videos for, the Russell Brands of the world, the Jimmy Dores of the world, even in like AOC or Ben Shapiro. Like, I don't know what camp you're in, the Richard Wolfs, whatever it is, whatever problem you see in the world, this crypto space is providing a lot of solutions for this. And if you're unhappy and you need a reason to be excited, I mean, my God, I sleep so much better at night. So much better. It's a crazy world, Tom, and Happy for a Change is right here doing what it was set out to do, giving our attention to great ideas that make you more efficient, more effective, more able of pursuing your passion and your dreams. And is there anything better right now than crypto? Here I was waiting for augmented reality, waiting for Apple's eyeglass, and tick, 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 tick. Crypto just keeps creeping by. It's a bold new world. So can we stream again tomorrow, later on this week, and we continue this video? Because I really think it would be good to get it out.
I'd love to get it out, get it done finish it all by the end of the week.
All right, so we're going to do that. All right, anything else on your heart, on your mind you want to talk about?
Lots, but no time tonight.
No time tonight. Remember to subscribe to our channel and hit that little bell so that you know when we go live. We go live often without warning, so hit that little bell so that you know. And if you like this video, like it. And if you think it's helpful, share it with somebody else. If you want to connect with us more, we have a Telegram and Discord channels. You can get the links of that right in the description below. If you want to be able to really connect with us, become Patreon on patreon.com/happy for a change, and you can have us in your back pocket. We're really excited. The world that we're seeing and the world that we're shaping, that we're a part of, is a world that you're going to want to be a part of too. So patreon.com/happy for a change. If you want to join the audience for Happy for a Change, go over to facebook.com/Happy for a Change and join the Happy for a Change audience. We're creating the largest online audience of people who are willful and deliberate, who want the world to be a better place and are willing to do something small in order to get that done. My name is Peter Hartman.
I'm Tom Hartman.
And you're watching
Jumpstart
Live. This was so much fun. Oh my God. See you folks next time. Bye.